I'm often asked this question, Mark, are you a day trader or a swing trader? And it's always an interesting perspective because I've never labeled myself as an intraday trader or a swing trader. I've only ever just traded the markets how I see fit. And I understand the perspective because many people are looking for that, can I trade session by session, or my lifestyle's a little bit busy so I want to be more of a swing style trader. They're obsessed with this idea of labeling themselves. In this episode, I want to debunk that because it's so much healthier for you, less stressful and more enjoyable when you can take that label off. I'm going to demonstrate on the charts, and by the end of the episode, you're going to be crystal clear on how it's more important to build it around a lifestyle versus you being glued to the screen. So here I have in front of me is two pairs. So I've got Pound Aussie and Euro CAD. I'm going to show you more of an intraday movement and then more of a swing style movement. I thought this would be a great opportunity to spontaneously make this video just because this is actually a recent trade. This was actually a mistrade for myself purely just because of the time zone, but many people in the community also caught this position, but it's just going to demonstrate as to exactly what I mean. So what you have to understand is that when you're session by session, listen, I've been doing this for 15 years and I've seen many traders burn out because of this process. They're obsessed with this label as to, I just want to be a day trader. I want to be in and out the market. And what they do is they get their insecurities involved and they tell themselves, but being a day trader suits my personality. False. What's happening is that they've found a way to trade intraday movements, and because they've been in the market for, let's say, an hour or so, they've then felt good by being in the market and being out of the market. The problem here is that they're stressed all the time. They're stressed even when they're winning, they're stressed. So when they're obsessing over take profit, they're waiting candle by candle, it's getting 5 pips away from their profit target, they're getting anxious, so they're always stressed. And what they haven't learned how to do, they've not learned how to regulate their emotions. And because they've not learned how to regulate their emotions, they're scared, anxious. So what do they say? Say, right, I want to trade this way because this suits my personality. Listen, that's a slippery slope. Where do you draw the line? Because in one moment, it'll be, right, I'm happy to be in the market for a couple of hours. You know, it suits my personality. Next thing you know, it's going to be an hour, then 30 minutes. The root of the issue is that you don't know how to regulate your emotions and you don't know how to be calm and collected and composed on the charts when there's money at risk. Well, listen, there's tools and strategies to work on that. But avoiding that is not helpful to you. How I've always looked at the market is that I don't really care whether I'm swing, scalp, intraday. It doesn't matter to me. What I'm interested in is what is the market offering, and is it around my lifestyle? Because I don't want to be glued to the screen. I don't want to be glued session by session. Sometimes you have to learn when to take a step back. Someone who is session by session based and they're obsessed with always finding trades, when the market is breathing and it's taking a step back and you just have to literally sit on your hands, best position you could do is just preserve your capital. That individual, because they're session by session, they're used to just trying to force trades. They will force trades when they need to take a step back, so they don't know how to do that. That's why I have a problem with it. And I've always found sustainability, trading price action, market structure, and really diving into the sustainability factor. I'm not stressed. I'm so calm when I'm trading, and I enjoy it so much. And a lot of our students enjoy it as well because you're not stressed about it. I'll show you what I mean. So this particular trade, this was last night's position. Now, as you can see, very simple structure here. This sequence is beautiful when you really look at it. So there's a little bit of a lesson in here as well. So what you'll find is that, let's say you've got a high here on Pound Aussie. Now you can see how that is a bullish high test. Right, so with that bullish high test, generally what you'll find is that price is always seeking liquidity. It's always moving to find that. Now, you're going to see these repetitive price structures and patterns happen in the market. This one in particular, you can see price moves up in the form of a 1, 2, 3. Now, you see this gap in price here, as you can see, it's about 75 pips. It will eventually look to fill that gap. Now, you never know exactly what time frame it's going to do that. Some of them are going to fill 24 hours later. Some of them could take a little bit longer. So it's about understanding the sequence. What you have here is this low point, but you see how that move was very sharp. This sharp move here, we pushed above, we formed all of these continuation patterns, we moved to the downside. Now look at the gap. We also create another gap, which is here. So if you look at the sequence that we're in this beautiful area in which that we can look at that and say, right, there is a high chance that we're going to fill those areas. And by filling those areas, it means we can position ourselves both swing and intraday.
So just quickly guys, if you're enjoying the content that we put out on the channel, make sure that you stay in the loop by commenting, subscribing to the channel, turn the notifications bell on so you're always in the loop of the content that we're pushing out on a regular basis. We appreciate the support, and make sure you utilize the resources that we put out. So check all the links in the description. They will help you out massively on your trading journey. Right, now back to the video.
So you might decide to take, let's say, more of a swing style entry from the top, and what do you have to sacrifice? You have to understand that your stop loss will likely be larger, and that you're going to have to deal with deeper pullbacks, and you're just going to let it run. So let's say, for example, you got involved with more of a swing style entry after the daily close, and you got involved with, call it a 70 pip stop, slightly larger stop. You could be looking at that target area saying this is inflection point 1 for about 8 to 1. Here is the low point. This is kind of the bottom of the range. I'm looking at about 9.7. You got to let it run. There is nothing different. This is not a intraday strategy. This is not a swing style strategy. I'm giving you a swing style based off your lifestyle. Let's say, for example, the reason why this is really dynamic is that let's say you was going to go and travel for, I don't know, a month, and the only way that you could normally make money was being session by session, or only in the New York session, for example. Well, then guess what? For a whole month, your routine is going to be out of whack, and if you're trading lots of money, then it's going to be difficult for you to perform because you're not in the same environment, you don't have the same routine, different time zones. There's loads of moving factors. So what, do you just not make money for a month? And then is that a slippery slope, and then you're out of sync, and then that affects your next month? So again, it's about understanding that if I know that if I'm going to be for a busy period, if I wanted to take more of a looser, relaxed swing style entry, I could and just let it run. But the good news is I'm very dynamic. I'm always on the charts. I'm able to do that. I'm able to get in with the intraday movements. So I have a bit of both. So you see how me labeling myself in this scenario to go, oh, I'm a swing trader. If I'd done that, I'd miss out on this entry that I'm about to show you. Going back to the sequence, this gap, because I'm kind of giving you some lessons in here as well. So naturally, with this gap here, we're looking for price to fill that area. Now, there's a chance that we fill both, right? So we're either going to sell off from here, fill that gap and move, or we're going to sell off temporarily from this area, move back up to fill that gap before we come back down, and then we go again. So either way, we don't need to know exactly what is going to happen next to still benefit. So if we then go to lower time frames, this is when we get into our kind of price action executional time frames. We go down to the 4 hour, to the 1 hour. Executional is more 1 hour, 15 minute and 5 minute. That's how we execute. Now we've got very, very typical structure here. So if I just move this out the way just so you can understand this position. So we go granular, we can see our intraday movements. So imagine I said I'm a swing trader and that's all I'm taking. I wouldn't be able to take this position. Therefore, if I go to the lower time frames, this was a beautiful trade. You had multiple opportunities to take it. Again, you don't need to understand the context behind the trade, but this is the entry. For those that are in the community, you'll understand how to take this. Nice 10 pip stop, and you would have walked away with, if you was managing it more loosely, you would have walked away with probably, yeah, with that spike, you probably would have been out there for about 13%. But let's say a more conservative around a 10 to 1. So it's pretty much a 10 to 1 position in 1, 2, 3, 4, 5, yeah, probably about 6 to 7 hours. Call it 6 hours, you would have been fine with that. I didn't decide I'm an intraday trader, I want to be in and out in the same day within 5-6 hours. That's not how that works. I let the market dictate that for me, and what that does is it removes the pressure off of your shoulders. Because, and I've seen it before, people stressed while they're winning and while they're losing. So even when they're winning and it's getting 10 pips away from their TP, TP1, TP2, TP3, right? It's hilarious. They're just watching there and they think that they're battling the market. So what they're doing is that even when they're making money, they're anxious. So can you only, and that's on camera. Imagine what they're like behind camera. It's be insane. However, you're now obsessing over, your ego's involved. It's now about, I just needed to hit my TP. You're not taking a message from the market. Your ego's so far involved, and I promise you that type of mindset will always lose money in the long run because their ego's too far involved. Sometimes you've got to take a message from the market. So what we do is that we trail our stops. So whether I would take it as, let's say, a swing style position or an intraday movement, I'm still trailing my stop. What I would do in that scenario, if I did look at it from, let's say, a longer term trade, I was looking to take it from the top of the range to the bottom of the range, well, then I may manage my trade a little bit looser, but I would have a plan for that. So it's systematic. But can you see how you have to have a dynamic routine? You have to be dynamic with the market because there's different cycles. So it's more so about, listen, sometimes I might take 12 trades in a month. Sometimes I might take 15. Sometimes I might take 8. I will allow the market to present that. I don't need to put the pressure on myself to know exactly where I need to take profit every time and it has to hit TP. No, it doesn't. I can just use the structure, use the consistency, trail my stop loss, lock in profit. I might aim to make 20 to 1, but I might only walk away with 10%. Imagine if I was only looking at a TP of, let's say, it was just a tiny little range and I was obsessing over this. Let's say I'm really zoomed in, not looking at the bigger picture. I don't understand the structure of the market and I'm just going from top to bottom. You know what? And I'll say something like 4.5%. Oh, I'm happy with that. What does that even mean? I'm happy with that. That makes no sense whatsoever. It's not about what you're happy with. It's about what is effective for your account growth. So then someone will just cut a trade short, take it, and because they've got TP on there, and that's it. And then they'll realize the market just carries on running. And then let's say they go into a bit of drawdown. They could have made 10 or 15% on a position, still hit, say, let's say they hit 4.5%, then they go for a streak of losses, which can happen to any competent trader. They take 4 losses, they're back at break even again pretty much. Where in the same trade, they still took the same position, but they was obsessing over taking profit. They don't want to be in the market any longer than an hour because of their insecurities. They've not learned how to regulate their emotions. And with this label of, but I'm a day trader, got to be in and out, it ruins people. Now, I know there's some of you out there, you're going to be like, I'm a day trader, I make money. That's not what I'm talking about. I'm talking about this obsession with not taking the message from the market. I'm sure some of you have a system. I'm sure some of you have a thing in which that you're in and out the market for a couple of hours. Fine. I've been doing this for 15 years, and I'm saying, generally speaking, of the masses, most people that don't want to be in the market for a small period of time are those that have not learned how to regulate their emotions. If you've got tons of experience, you're consistent, and you know what you're doing, maybe that's a preference of yours. But I'm talking about the masses. The majority of people are not doing it because they're competent. They're doing it because they're inexperienced and don't know how to be emotionally in tune. So that is the intraday movement. As I said, I wouldn't have planned to be in this as an intraday movement, and I'm not planning to do anything. I'm planning to execute, follow my plan. What the market gives me is what the market gives me. So I take that pressure off my shoulders. But let me show you more of an obvious swing style position. We'll take a look at EuroCAD. So with EuroCAD here on the daily, as you can see, we'll even go weekly so you can see the real true range here. So look at this on EuroCAD. Nice and simple. What is the chances at this major low area where price has been selling off? You got impulse, correction, impulse, correction, impulse, correction, impulse. We finish off the move. Sellers that have been selling in this market, what's the chances that they're taking a lot of profit in these areas at these lows? Very, very high chance, right? So let's say you was looking at it just as a pure swing style position. You could be looking at that on the weekly. You could be looking at it on the daily. Generally speaking, you'd probably want to go more daily. Otherwise, you're going to be getting into ridiculous stops and then really skewing your risk to reward. But let's say, for example, you want to be in on the daily. You're taking a long position here with your stop below. So again, it's like 145. It's quite a large stop. At this point, you'd be running about 7.5%. Even, and there's a little hack here with what we do within our strategy because it's dynamic. Even if you was to go for more of a swing style entry, you don't have to have a ridiculous stop size. You can enter on the lower time frame. So what it does require is this. It requires you being a little bit more active, because I'm going to explain something very, very key. This is more the advanced swing style of trading, if you like. For any of you out there right now that are swing style traders, I can almost guarantee I could improve your returns just by you spending a little bit more time than what you're used to on the charts. Very, very small amount of time just to refine your actual entry itself. Still do everything else the same, but just enter a little bit more precisely. So still manage, let it run, look at your range from top to bottom or bottom to top, whatever it may be. However, just refine the entry just ever so slightly. So then what it stops is it stops something like this, that as you can see, it's worked out, right? You'd be looking to take this pretty much all the way to, well, you'd be taking it a lot higher, but you've got inflection points along the way. But let's say you was aiming for this last bigger bit of volume before we had that continuation. You've got target of around 11.5%. That's a very, very big move for only 11.5%. So what would we do? We would then go to the lower time frame, still be looking, let's say it's around your lifestyle, you've you really don't have time to be on the charts. You work a very demanding job. Maybe you love your job and you're really looking to build this up as not so much a side income because you still want it to be a priority, but you love what you do and you're not looking to change that. So you want your actual trading to fit around your career. You want it to fit around your lifestyle. You don't want to be glued to the screen. I get it. I'm all for it. But let's just refine the entry ever so slightly with very minimal work. So let's say, for example, we was looking at it here. You wouldn't need to get in that because I can already see within here, you'd be able to get in tighter, end up with probably around, call it a 70, yeah, around 70 to 80%. So instead of 11.5%, just by refining that, and I could go even lower, I just went to the 4 hour there, but let's say we went for this particular position and you was looking there, instead of 11.5 for all of that move, we've just now taken it to 20, just by a tiny little bit of extra work. Now that might require you to be on the charts just for a little bit, but it's minimal effort for the reward because you're already doing the hard thing anyway, which is actually emotionally staying in the trade, letting it breathe, dealing with the pullbacks, managing. You're still doing all of that. So why not refine your entry versus just having a massive stop for the sake of having a massive stop? There's just no point. So it's that advanced style of swing trading if you did want to put yourself in that bracket. You could then go one step further and go into more of the executional timeframes and realize, well, hold on a minute, if I'm going to do that, of course, what are the risks? The risks are in the intraday movement, you might try and get involved in the swing style position and then you get tagged in and out, of course, but you should know what you're doing to be able to position yourself correctly. That's fine. However, let's say you was looking to get involved and you was in after the break there, you would be able to get in here for probably about a 40 pip stop. And then you'd be looking there. See, that wouldn't be unusual. That's not a very aggressive, risky stop. It's a 40 pip stop. It's just positioned correctly. So even where you are now, and you approached it from more of a longer term swing, you was letting it breathe, you got to deal with some serious big pullbacks. However, that's your way of doing it. That's fine. That suits your lifestyle and your career. You're at 28, pretty much 28%. And then for the bigger target at the top, we're talking 42. So then we've doubled that again. So you see how just by understanding the price action, I've not even gone into the specific details, I'm just showing you the rough positioning of where you would enter. It's the same idea longer term. I'm just helping you refine the entry in the lower time frames. And then once you've done that work, well, imagine you hold that whole position and you walk away with an 11.5%. And just by doing maybe 5% more work, you could take that 11.5 to, let's say, 40. What difference would that add to your account? You do that a couple of times a year, you've made 80%, you may fit that within your lifestyle, perfect. There's your swing style position. So there's two ways to do it. You can do it the typical conventional route, you can go larger stop, you can let it breathe, do nothing. I get that, you can definitely approach that with the way that we trade. However, there's a little refinement in there that would accelerate your returns with minimal work. So wanted to give you that example, guys, and just an overall bigger picture as to literally how simple we are basing the markets. But when it comes to price action, it comes to looking at the markets, the way that we are trading the markets have been battle tested for nearly 40 years because these behaviors, they're repetitive. What seems simple to you, you might think, oh, that's obvious, I know what that is. You probably don't. You probably know roughly what it looks like, but you still don't know how to deal with it. But because what we're doing is that what we're essentially looking at is that we are looking as that where are the bigger players going to step into the market? Where are the bigger players likely to take profit out of the market? Where would we then see a build up of volume and then more volatility? And we essentially want to catch those runs. So for us to go, I'm only swinging it, I'm only going to go intraday movement, doesn't really make any sense. So hopefully by the end of this video now, you've understood that you labeling yourself in these brackets, they don't really help you. If anything, they hinder you, because you might be adjusting your stop loss based off of this label of I'm a swing trader. Well, if you want to be a swing trader, be a swing trader. However, how much profit are you leaving on the table? How much profit sustainably in a safe manner are you leaving on the table? That is a question that you need to ask if you're serious in this game. Remember, it shouldn't be around your personality. It should be around your lifestyle design. You don't want to be anxious. You don't want to be stressed. You want to be relaxed, calm, and composed. You want to spend time with your kids. You want to open other businesses. You want to have freedom. You want to travel the world and do it sustainably and flexible. Then you have to be trading in a way that you're not glued to the screen every 5 seconds or checking the chart every hour, right? That is a slippery slope to excessive drawdown, and it's where no trader wants to be. Hopefully you've taken an immense amount of value away from this and just broaden your horizon, your perspective. And when you open yourself up to just trade the market, trade the system, and don't care so much of whether you're swing, day trader, just trade, manage your emotions, and you'll be absolutely fine. Guys and girls, really hope you enjoyed this episode, and I'll catch you in the next technical lesson.